All right, so now getting at forecasting liabilities. So what we did earlier with averaging this particular function, we can copy that down for accounts payable. So we'll copy that formula and paste it, and you should get 189.05. The next thing is short-term notes payable. We're just going to assume that it is what it is in 2020. You can change those assumptions, or that could be changed later. With respect to other current liabilities, we're going to copy that formula from B14 now and paste that here. And you should get 163.38. The total current liabilities, that's just transition those formulas over. So actually at this stage, let's copy those over, and then we'll adjust the ones that we need as necessary. So for now, we're going to keep long-term debt the same. So that's our total liabilities. So with long-term debt, we'll just set that equal to what it was previously, C18. Now, with respect to common stock, we're going to keep this the same as well, unless there's any changes we know are going to happen with respect to long-term debt or equity. Next, we're going to look at the change in retained earnings. This is going to equal forecasted net income less any forecasted dividends. So in order to do this one, this is going to be equal to the retained earnings in the previous year, so equal C21, plus the pro forma income statement net income of 116.32. So that's the quote, in my case, I call this PFIS, in quote, exclamation B15. And then plus, now we're going to go to the statement of cash flows. And here, we're going to pull B19, which are the dividends. So we're going to assume that the 2021 dividends are the same as the 2020 dividends. So when I hit enter, you should see 309.25 is the forecasted retained earnings. So then we see that after copying over, we have 1771.29. That's our total liabilities and owner's equity. That is not the same thing as the total assets. So when you initially do your pro forma balance sheet, it's probably not going to balance. In the upcoming videos, we're going to talk about how we deal with this, how we balance that out with some discretionary financing, and that will also involve using some new techniques in Excel, such as iteration.